Hello and welcome, class. Today we're going to be talking about how to fund your life insurance policy properly, effectively, strategically, so that we continue to increase cash flow, lower expenses, raise our credit score, all using our own income. All right? Now, on the board, we have Denzel Rodriguez doing velocity banking. I decided to throw my numbers out there, show you guys the progress that this channel has been making, myself personally in my own personal finances, and for all my loyal contributors and people that I've been communicating with. I believe this video right here is going to build even more trust in this journey that we are both on together, which is paying off debt. Increasing cash flow, lowering expenses, raising our credit score, getting our legacy in order, building wealth, securing ourselves, and ultimately having the ability to impact other people's lives through business relationships, through sustainability, right? And through legacy wealth. And most importantly, establishing your kingdom here on earth and establishing his kingdom for his name's sake, so that you may prosper as a king. Here we have on the board income anywhere from $3,100 to $4,000 a month, and that number is increasing steadily. And to give you a little background information on that income, 4 months prior, I was at zero. Okay, I had gotten fired at my job, and let me tell you, that is the best thing that has happened to me this year. I believe, it has snowballed into so many opportunities in the last 4 months. So I want to thank the manager. I want to thank the HR lady that all colluded or played a role in getting me fired. Okay, I want to thank them and pray over them that they may, rethink their thoughts, that they may ponder on the effects that it has had over me. And I pray that one day I'm able to help them. All right? Because all in all, I was able to work there for about 2.5 years. I was able to impact lives, right? And help my staff. So shout out to my old extreme staff, the kitchen staff. All right? Love you guys. Shout out to you guys. And I know there were certain people in there that I was just manifesting success into their lives and feeding knowledge to them. And unfortunately, that channel was cut. But you know what? I started my own channel. All right? And now you and everyone else has access. Okay? And we're doing bigger and better things. So, anyways, as of today, December, income 31 to about 4 grand, a little bit more than that now. Expenses are about 2,700. Debt is about 18K. Cash flow 500. Number is fluctuating due to the increase in income and also the increase in business expenses. So it kind of evens out at like a steady 500 cash flow. I have a debt weapon, unsecured line of credit, personal for 10,000 at 15.99%. Okay? And to break down my debt a little bit, I have a personal loan amortized for 10,000. The remaining balance on it is $2,600, and the monthly payment is $212.42. All right? And the other majority of debts that I have is like credit card debt, all with 0% interest, and they're all gonna start expiring come 2019 after April, and then all the way to like November, December. All right? So the topic that we're going over is how to fund your life insurance policy. But there's some things you need to have in place before we start talking about life insurance, asset, and wealth protection, right? We want to make sure we have a nice plan in order when it comes to wiping out your personal debt, so that you do have the money to fund your policy, number one. Okay? Number two, we want to have that tool that's going to help us fund that policy. What is that? The debt weapon, the line of credit. So before I go into the numbers here, I just want to lay out some facts about my own personal policy, all right, which is right here. I'm going to be putting in $6,000 a year. My MEC is $11,000, okay? Over the course of 30, 40 plus years, and I just kind of wrote it out conservatively, at age 67, my death benefit will be somewhere around 1.8 million. My cash value will be around $1 million. By age 87, it'll bump up to 3.3 million. Cash value will be around 2.8 million. All right. Year one, putting in 6,000, my cash value is at 3K. Ugh, doesn't sound too good, right? Well, to give you a little story on my policy is because, like I said, 4 months ago, remember, my income went to zero. I got wiped out, fired unexpectedly, and I had to make a decision. Prior, I've been studying this material and doing it for myself, but I didn't actually get a policy on myself, right? Because I was preparing myself for it. But I had to make a decision whether to go get another job and work for someone else that I don't want to work at when I've already been given the vision by God to do what I'm doing now today. Right? So 4 months ago, I decided to design a policy where I would get a commission that would match what I was making at my job to buy me 1 month. So all in all, I was willing to take a hit long term for a short term gain, because as an insurance agent, and for those, you may not know this, but if you have an insurance license, you can write a policy on yourself and then collect the commission. Depends on what agency you go with or who you're partnered with, but the team that I have now was so transparent, was willing to design my own policy and pay me the 100% commission on my own policy. And that ended up being around $2,600 was my commission, right? So I was making about $2,200, $2,300 at my job. After that got severed, it was like 2 weeks was going by, and I was like, oh boy, I got to think of something. I was like, you know what? I'm going full force. I'm going to commit. I'm just going to do it. As I get older, I can always start another policy, right? With much better cash value performance. But the whole idea was I did this simply to get to you, to help you, right? But notice that even with a 50% cost, right, 3K a year, that's pretty much the cost of life insurance, that the money still performs quite well, right? Year one, 3K. By year five, it's got 27,000. 6 times 5 is 30,000, right? I break even around year 6, year 7, right? So not bad, even with a high cost. Now, mind you, when I'm designing policies for clients, by no means am I trying to have you have a cost of 50% of whatever the amount you're putting in, especially if you're older than me, like 40, 50, 60 years old. We want to have, 75% like cash value. And then we want this number to be around, 25% safe, right? So we want safe number to say is a 75-25 split. I've seen designs where they go as high as like 85-15, 80-20, or 70-30. All depends on your personal preference when we're designing the policy, for the banking concept. All right, come over to here. We got the numbers down. Denzel's putting in 6K a year with a MEC of 11. All right. I pay it monthly, so that's $500 a month. Now, in order for me to afford $500 a month, I'm pulling from the line of credit. Okay, I have quite a bit of space in here because my expenses, right, are dropping and hiring. But what's nice is I dump, like I said, like I tell you guys, I dump all my income into here, and then I pull expenses out little by little by little. And then at the same time, I'm wiping out debt to lower expenses to boost myself, okay, to give me that ability to keep funding this thing. Okay, now you know that part, we got that down, we got the numbers down over here, we got our debt weapon, we're doing velocity banking, simultaneously we're funding our policy. Okay, 500 a month for this scenario right here. Here's how it looks like. You get the line of credit, which funds the policy. Okay, I have income. The income, before I pay the policy or before I pay bills, what do? I put the income in the line of credit, which pays me back. I pay myself back. I pay virtually nothing in interest, peanuts, even at 15.99%. Even at that rate, I still pay nada, okay? Because why? I'm dumping all the income. I then take money out. I'm running the policy as an expense over here, right? So I have that factored in to this number. I'm running it as an expense, right? Which then, when the policy gains dividends, grows cash value, over time, what am I going to do? I'm going to invest in this business that I'm doing right now. I'm going to invest in real estate. I'm going to invest in partnerships with you. Some of you have already experiencing that, right? We're partnering together. We're doing work together. We're doing awesome work together. And we're prophesizing and foreseeing future deals in the real estate, or even in your own personal business. Or maybe, like someone has just become a channel sponsor, right? I posted this yesterday, but now we have a channel sponsor. I can't wait to work with this person, right? It's gonna be amazing what we're gonna do. So anyways, here's a example, all right, of how to use the policy. So we know how to fund it, okay, which is we continue to do velocity banking. You get your 4 major numbers down: income, expense, debt, cash flow. Understand it, get the line of credit, do velocity banking. We now have a policy in place. For some of you, we're working on it. Others, we're thinking about it. We're working towards it. We're planning for it. Some people are putting policies on their children. Oh, I love it. Okay, this is amazing. Here's an example on how we use the policy, how I will use my policy. So by year, anywhere from the 5th to 6th, 7th year or so, right? If I start putting more than the 6K, I'm assuming I'm gonna have like 43K in cash. All right. Conservatively, if I'm earning like 5% return, all right, that's that number right there. If I borrow against my policy, like I would a line of credit, the interest rate is 5%. Okay, it's usually going to be like matching. Your dividend rate is either going to match or be less than your actual returns on your policy, so that we get that arbitrage, we get that offsetting effect of interest. So if I borrow 30 grand at 5% interest, then that's my cost. But if I have 43,000, because when I borrowed the 30, okay, I didn't borrow it from here, right? I borrowed it from the insurance company, Mass Mutual. Okay, they're gonna give me a loan of their money, and they're gonna charge me an interest rate. Okay, that money is gonna go to them. Okay, Meanwhile, the insurance company is paying me on 43,000, so we get that difference. All right. Now, what do I do with this 30 grand? See, by then I'll be debt free. Okay? By then I'll be debt free, no doubt whatsoever. I'm gonna do a rehab deal with my friend in California, or my friend in Indianapolis, or Georgia, Virginia, Florida, right? Texas, especially Texas. I gotta do a deal in Texas. I got way too many clients over there in Texas to not do a deal with you guys. All right. So I do a deal. Right? I be a part of the rehab. Hey, I throw you 30K. All right, pay me 20. All right, look, I make 6K on 30. I keep the 6K, and I pay myself back the 30,000. Okay, rinse and repeat. When I put this 30 back here into the cash, or when I pay back the insurance company, my money is non-affected. It's not affected. I'll still earn that same amount, okay? And then I'll have the ability to take out another 30,000. You figure a rehab deal takes about 3-4 months to complete. Do what? 3-4 deals a year? 6, 12, 8. Come on, man. I mean, that is just on rehab deals. What if I actually get in the whole piece of the action, right? That's the whole idea. I'm working with someone like you who's already established, 40, 50 plus years old, or 30 plus years old, got a business, you're making good money at work. Now you're figuring out how to fund, your business and get it going. I'm gonna help you. I'm gonna be a part of that. Whether it's on the velocity banking side, the insurance side, building your credit. So many things that we can do together. So that is how we fund our life insurance policy. And to give you a little idea, coming back to the 4 major numbers and doing velocity banking at the same time we're funding this, here's how this portion looks like. Ready? We've got income going into the line of credit. So as of right now, the balance on my line of credit is just under 1,000. It was here, right? And then I took my income and I chunked at it and brought the balance down just under 1,000. Okay? So all income went in. Expenses are gonna come out, right? We got Christmas, we got New Year's, right? Gonna get some gifts. I gotta pay the rest of my bills for this month and keep investing in the business. Okay, cool. Cash flow is gonna stay in, all right? I should be able to zero out the line of credit before January is over. I mean, before January even starts, I'm going to zero out the line of credit. And then I'm going to chunk at the loan, right? But see, I'm actually going to chunk at it on December 13th. That's my goal. I'm going to chunk at it on December 13th and still zero out the whole line of credit by January. And then also between now and January, I'm going to chunk at the policy 500 or more. I'm going to chunk at it, not have to worry about that bill, right? Pay myself back again, right? Keep doing it. I should be debt-free by June of 2019, wiping out 18,000 of debt. And then the only debts remaining are my 2 car leases, which are, I don't even consider those debts. Those are just installments. As soon as the lease is up, I turn it back in, get a new car, c'est la vie, okay? So this is cool. And here's what's also interesting. By June, I'll have my policy anniversary, right? Meaning it'll be 1 whole year since I had the policy, and I'll have the ability to adjust how much money I want to put in on a monthly basis or quarterly, semi-annual or annual, where I'm like, all right, I want to throw in 10K at this thing. All right, cool. All right. And here is my cost on what? The line of credit. 15.99%. Making $600 to $6,600 chunks. Times that number by 15.99. Boom, that's 1050, 334 a year, 289 a day, 86 bucks a month. Oh my goodness. That is so cheap. Meanwhile, I'm earning interest over there, wiping out debt over here. I have this ability to keep running the business, to keep serving you and keep helping more and more people go further and further along the way. And my oh my, are we going to have some progress, okay? Last thing I want to leave you with is I want you to pray for mom, okay? I want you to pray for my mom, right? The number one person why I started this whole thing, okay? Mom was my first client, all right? Now, she is in the process right now of getting a raise, all right? She's got to work real hard, all right? So she's going to go from 15 to 20. That's what I want you to pray on. That she goes from 15 an hour to 20 an hour. She is also doing velocity banking. She is also funding her policy. She is wiping out debt. Okay, her debt free should be right around my debt free. Oh, it's gonna be amazing. Now, if she gets this raise between now and before my birthday, January 4th, then her present to me is that she's gonna take over the car payment. So right now I'm paying both cars. Right? I have my own car. She has her car. Right? But I pay both of them and have been for a while because that's what, you know, son Denzel does. I don't say no. Sorry, I'm a huge helper. Don't know how to say no. One of my flaws, maybe that some will see. But you know what? It's gotten me this far, so I'm not gonna quit. But anyways, if she goes from there to there, she'll have the ability to pay that monthly, and then guess what? Boom, that lowers my expenses, which then gives me the ability to spend more time in the business, more investing in the business, where I can get that marketing coach and that consultant, which I already have, but I'll be able to keep him longer, right? And be able to pay him more to help me more, and I'll be able to make strategic partnerships with my other friend, right? That's gonna help me with YouTube descriptions and writing and doing thumbnails and just automating all that good stuff. And then on top of that, I'll be able to finally reach all the people that have been filling out forms. Oh my God, we're like 320 plus forms filled out, right? And I have 100 plus clients. So we've got 300 plus people, and then we have 100 plus paying clients at all different levels that are just giving. That's amazing, right? So far for the past 4 or 5 months, it's all been just giving. People just giving, right? Come January is when the website launches, okay? The business launches, technically. My service will launch, and then I'll be able to have this automated system where I can at least say hello and reach out to all the people that filled out forms. Because I know some of you guys are like, yo, Denzel, I filled out a form like 3-4 weeks ago. Where you at? I'm like, brethren, I'm helping out mom, okay? Helping out all the moms that fill out form. Those are my priority, right? And then it's the clients, people that actually pay me, all right? Got to serve those people, right? Whoever pays first, right? And got to serve those, right? Those are the committed ones. Those are the ones like Denzel. I am for you. I am with you. We are going to establish our kingdoms together and move forward. And then it's my giving, where I help not only moms over here, but then I'm helping other people like my veterans, right? Every time I see a veteran or military oriented, I do my best to reach out to you and give you a quick call and do like a 20-30 minute consultation. Be like, listen, Listen, thank you so much for your service. Thank you for giving me this freedom that we have here in America, greatest country in the world. I want to give back to you, all right? And then I have my first 100 people that believed in me in the very beginning, serving those people, and then everyone else. All right? So that's the strategy, that's the plan. Listen, more things are to come. Changing up my game a little bit. I want to be able to produce content daily, but I need to catch up. I need to satisfy my clients and make sure they're happy and they're not waiting. You know, like getting at, oh my God, I need to do my chunk now. Let's go. All right. I love you guys. Have a wonderful day. For all the new people, welcome. God bless. Subscribe, like, leave a comment below. Let me know your thoughts on how to fund the policy, how to use the policy, how to do both velocity banking and infinite banking at the same time, and then do your praise dance, all right, your hallelujahs when it's all said and done. Have a wonderful day.